Now today we'll be talking about the Fibonacci retracements and how to apply them to a trading strategy. Now this trading strategy that I'm about to show you is a trading strategy that we use at PlusFX, and it is a very profitable trading strategy, and it's a very reliable trading strategy, and mainly it's very simple. And basically what you want to do is you want to find either a very clear uptrend or a very clear downtrend, and of course you want it to start retracing a little bit. As you can see here, it's started to retrace a small amount. So then we're going to add our Fibonacci retracements as I showed you in the previous video. Start with the high and go down to the low and leave it there. Now once it's there, we want to wait and ignore the 23.8 line, ignore the 38.2 line, and focus on these two red lines, the 50% and the 68.2. Now what we're looking for is the price to either touch the 50% line or the 68.2% line. Okay, so as you can see further down here, the price actually does touch the 50% line, and as soon as it touches the 50% line, we are waiting for upwards confirmation. Now we get upwards confirmation fairly quickly, as this is a very bullish candle, because as you can see there's a very long shadow there. There's a very long shadow in the next one as well, and then it's followed by a very small doji. So this implies, this implies that the price is actually going to carry on upwards, because the downwards trend is showing it's losing momentum. So around here we would enter long, as we have our confirmation that it's going to carry on upwards. Now as soon as we enter long here, our take profit will always be the 0% line. Straight away, always the 0% line. And our stop loss would be just below the 50% line. And if it touched the 68.2% line, then it will be just below them. And we will put it just there for starters. Now once it starts going, here you can see it does drop a bit and uses 38.2% line as support, and it carries on. At this point we will modify our stop loss to just below here, the last swing low, and then when it carries on it drops a bit here and uses this bit as a support. Therefore afterwards we will use this as a stop loss, and just keep moving it up and up until it does touch our take profit, and it actually does right here. So there we would make quite a healthy profit at quite a very small risk, as you've already got that much risk and that much profit. So I'd say that's about a 1 to 4 risk to reward ratio, sorry. And this is a very common trading strategy that we use. However, we must point out that if the reward is less than the risk, then you should never enter the trade. So for example, if I set my stop loss just there and it's say 20 pips, and then my take profit is only 15 pips, then it's not worth the trade, not worth the risk entering, because obviously if you go down that road then you are sure to become a losing trader. Whereas what you want to be doing is maximising the profit and minimising the losses. So we say ideally 1 to 3. So for every pound you risk, you want to be looking to make £3. And this trade is ideal, basically, this setup. And these occur very often actually. So yes, we hope that once you start using this, you'll become very profitable. Thank you for listening.